Hey everyone, David Coe here. Hey, thanks for coming back in. One of the things that's really driving the cost of real estate right now is insurance. I'm sure everyone has heard about it, has experienced it firsthand. So I want to bring in my good friend Jessie Navarro here to help talk about some of the things that you can do to help, streamline and make your insurance more efficient. So Jessie, appreciate you being on the show today. The reason I invited Jesse is that we've been with farmers for a long time, the entire time we've been in our home here, over 20 years. And we have had a few claims over the years, and we've always loved it how farmers responded to that. And therefore we continue to stay with farmers year after year. So, Jesse, why don't you tell everyone who you are and a little bit about farmers?
Thanks, Dave. Thanks for having me on the show. Again, my name is Jesse Navarro. I've been an agent with Farmers Insurance. It's going to be 20 years now. I started when I was about 12 years old,
That's
and
back
been
when you had hair, right?
back when I had some hair. Yeah.
Right,
Uh,
right.
now specifically in the beach cities area, my office has been in Redondo Beach now for close to 12 out of those 20 years is I've been in Redondo. Prior to that, I was in Torrance, so always in the South Bay. And then specifically, I've also been living in the South Bay my entire life. I'm a graduate from Hawthorne High, and I live in the area, so I know the area very well. I chose Farmers specifically because of their what they offered me as an agent, the ownership opportunity, but also the brand name. It's a very strong name. It's been around for a long time, and we've had a very, very good run here with Farmers.
Yeah, look, you guys are still in California. Not every insurance company can say that these days.
Definitely, definitely.
Well, let's start off on that one. I think that's the big one. While people have probably heard insurance costs are skyrocketing, they probably don't know why. Like, what's driving this? And look, I know it's not just in California. Florida and Texas are also getting hammered with insurance, and other states. Why are insurance costs rising so quickly?
It's that's kind of a multi-level question. So, in places like you mentioned Florida and Texas and California, all three of us, and places like in Oklahoma where they have the tornado belt, here in California we have fires. In Texas they have storms and floods and freezing weather, and then in Florida they also have the tornadoes. So all of these areas they get hit really strongly with this weather that obviously beats up houses if it doesn't completely destroy them, right? So now what's interesting is in places like Texas and Florida, they don't have what we have here in California that has really hurt us in the over the last probably 3 to 4 years now. They don't have a rate cap. So previously, because of Prop 103, California had a rate cap where if you want to go over 6.9%, if insurance carrier wants to go over 6.9% of a rate increase, then it gets really, really difficult for them. So we were always bumping up against this ceiling to try to go up on insurance rates, right? When we needed them. Again, in Texas, when they have a storm, they go up 20%. 30%, 40%. So it's very common for that homeowner to see a lot of these rate increases, and then that's where there's a lot of movement in the market on the consumer side. Now here in California, we need 15%, if it, 17%, whatever that number might be, but we could never take them. So that's why over the last, at least since I've been an agent, I've seen probably 10 to 15 years of every time your home renews, it was going up. And it wasn't because there was a fire just a lot of people are thinking, I hear from a lot of my clients where they're like, well, I'm paying for the fire in the Palisades.
Mm,
That's not what's happening. They're paying for the fire that happened 15 years ago that we couldn't take that rate increase that we needed.
got it.
So when State Farm and a lot of these other companies started leaving the state, the insurance commissioner, they started panicking and they let us open the door and they kind of said, all right, take the rate you need. And that's why there's been a huge increases 2 to 3 times in some cases of why insurance rates are going up. It's because they finally were able to take the rate that they needed.
Mm.
And that's just because of, again, Prop 103 and it getting slowed down. Now with farmers, we've always been kind of ahead of the curve. So when we've been taking rate, even though we didn't need it in some cases, so that we can be ahead of it, and that actually allowed us to stay in California when a lot of other carriers were leaving.
It makes sense. All right, so look, rates are just going up in general. Part of this conversation is we just sat down and reviewed our policy with you, and I know as we were working with you, we were kind of pulling some levers to see how we could maximize the amount of assurance we were getting but also not paying as much money as possible. So I know there's certain levers that people have that they can pull. What are some of the things that you can do to kind of adjust the cost of the policy?
Well, there's two sides of that. Just as much as there's many places, if you're in a newer, with a newer carrier, so if you just moved carriers, let's say within the last 5 years, now all insurance companies, they use something called a reconstruction cost evaluation. So where now they're going into, we can go into your home just like we did with yours, Dave, where we're saying, okay, well, how many bathrooms and what type of flooring do you have in the bathroom? And tell me about how many sinks are in that master bedroom and things like that. All of these things are helping us determine where the value of coverage is that you should have, the building coverage, right? So now on the flip side, if you've been with your carrier for 15 to 20 years, and they're not reviewing that for you, automatically every year that is going up. Even in some cases now in California, we probably do need it because values are going up. And the value of your home is not as important as the cost of construction in your area is. Now, there has been a huge increase in labor rates and cost of material, all of those things, all of the COVID stuff is still affecting us because all of that back due supply that we weren't getting made all of this material go up. Now, in some cases where you started off high 20 years ago and these policies have an automatic increase to go up. So if you never really looked at that, you might be overinsured. So a lot of the times what we like to do with our new clients that are coming in is we'll compare against their old policy to see like, okay, well, beyond just because it has nothing to do with the value of your house. It has more to do with what is the cost to rebuild. So we'll look at cost per square foot to rebuild in a certain area, multiply that by the amount of square feet in your house, and then we're coming up with that value. Now, after we look at that value, then we're also looking at deductibles. When I started in this game, many people had a $500 deductible,
Right.
right? And it was just a very common thing to see. You don't need that. Then, so when I came in, I thought I was ahead of the curve and started quoting people with $2,500 deductible. Now I'm starting quotes at $5,000 deductible. So this is the biggest lever that you can pull without messing with any coverages is let's look at deductible costs, raise that deductible and see if how that's going to affect the price. Obviously, bundling with the same carrier is going to be another big number that you can push down by bringing in your autos, bringing in an umbrella, bringing in the earthquake policy coverages that you probably already have that maybe you haven't with other carriers. We can look at bringing that in to one place so that you can get the lower price on each policy by having that discount. Depending on your carrier, Dave, you just asked me about a discount because you got a line of credit with our credit union.
I was going to say, like, I'm a credit union member now, and I know there was other discounts I was eligible for because I joined the credit union.
Right. We call those, with farmers, we call those affinity discounts. You were getting the affinity discount already because you're a realtor. So that's one of the things that we offer. It might be because of a degree that you have, an engineering degree, a science degree, computer science, things like that. Or it could be based off of your occupation, lawyers, doctors, firefighters, policemen, all of these occupations, they get extra discounts. So checking with your carrier to see if they have any of those types of affinity discounts. That's another thing that you can do, which then spreads, where this is a home, we're talking about home insurance, but it also spreads across your other policies, your auto insurance and things like that. So really the big three is going to be discounts for occupation, discounts for bundling, and then actually looking at the specific policy in the nuts and bolts to make sure that, I mean, I've insured people, sometimes I get policies that are coming from other farmers agents that have left the business or something. We'll review that, and they've got more square footage than their house actually had. Coverages that really had nothing to do with their property. So more than anything, the lesson here is review your coverage, once a year. We're not always trying to sell you something. Most of
Right.
the time we are, but sometimes it actually helps you to review what you've actually got.
I know, I mean, we're not really in a fire area in the South Bay, but there might be people watching this that are in other areas. I know a lot of carriers have been also looking at, doing some improvements to the home to make it a little more either, fireproof. I've been hearing a lot about people that the carriers want them to put on automatic water shutoffs in the event of a leak. Can you talk about what some of those things are and how that might affect your policy as well?
Yeah, so with things like getting a new roof is obviously going to be helpful. That's going to help your premium go down a little bit. Um, these water leak detection systems, beyond giving a discount, so you start a home policy with us today, and within 30 days, you already are getting, you need to have it. But it's giving you a discount by having it within the first 30 days of you getting your policy. Now, if you don't get it within 30 days, then you lose the discount. Sprinkler systems inside of the house, that's kind of new buildings, that's what they're looking at. Having those types of things is helpful. If you are in a fire area, you can get I can't think of the word right now, but there is something where you can do with the surrounding brush around your house.
Clearance around the
Yeah,
home?
you do a
Yeah.
clearance, and then you actually get a certificate for that,
Mm.
and then that will give you a discount as well.
I know a friend of mine selling a system, like a sprinkler system that sits on top of your house, right? In the event
Mhm.
of a fire, you can literally have a water sprinkler system that goes around your entire home. That's probably in the extreme cases, but it seems like there's an industry developing here on fireproofing homes, which makes your house more fire safe, which is important, but also will probably get you some kind of discount on your property. And look, if you are in a fire area as a realtor, right, if I'm selling a home and this home qualifies for a reduced insurance cost and this one doesn't, that home that does have a new roof, it does have no eaves, it does have a sprinkler system on the outside, it's been cleared, like that home's worth more. That's just
Mhm.
a massive improvement you can make on your home.
Something else to add on. This is not something that you can do to really once you're in the house. It's actually speaking to your agent before you file a claim.
Mm,
I've had a lot of people who bypass us for whatever reason. They don't call us before filing a claim. They will call directly to farmers. So when they go and they call, and even if they file the claim thinking they're just getting information, but now that phone call is logged. It is not dinging you because maybe you didn't file the claim, but then I'm getting a phone call later on, is it saying I called AAA to go to another company and they said I had a claim. Well, it's like, now I can't go to AAA.
mm,
So, call your agent. That's we're gonna get into a little bit about who you're working with, but
mm,
having an agent that you can speak to give you some guidance before filing a claim is really important, and also to file the right claim. You don't if you have a 2,500 deductible, or in some cases they still have $1,000 deductible, and they file a $2,000 claim. Great, you got $1,000 back. That claim is now on your house like a ticket on your driving record for
mhm,
3 years. So for 3 years, you're getting dinged. They're actually surcharging you because you had this claim. But for 5 years, now you're not receiving the discount for not having no claims.
mm.
And if you call me, Dave, and you're like, I'm about to file a $2,000 claim, I'm going to tell you, don't do it.
Don't do it.
Yeah,
Right. In the long run, it's a poor ROI to save that $1,000.
exactly.
Well, look, I mean, I know when we met down, we looked at our policy and all we wanted to do was reduce the costs. And we found out that we were woefully underinsured. So I think it's important to talk about the fact that, yes, we want to save money, but God forbid we need a claim. What's worse than spending all the money on insurance and then all of a sudden we have a claim and we don't have enough money to come back and rebuild our home? For us in particular, look, I'm involved in construction. You told me what the cost per square foot would need to be on my home if we had to rebuild, and I laughed at you because that number doesn't exist anymore. It's probably 10 years outdated. Talk about the importance of, while you want to save money, you also don't want to be underinsured at the same time.
Yeah, so a lot of people are doing, there's a lot of ADUs going on. You and I both know about that. There's a lot of people who are just now, they're doing the kitchen, they're doing their bathroom, they're upgrading their house because for a while it was a lot cheaper to upgrade your house than it was to move to a new one.
And we had nothing else to do. We were stuck in COVID, right? Like, might
Right.
as well work on the house.
So with all of these changes that are happening in people's houses, all these upgrades that are happening, you need to let your insurance know because now, you spent 15, $20,000, in some cases, $100,000 upgrading the house, but you didn't upgrade your insurance. So now claim happens and, you've got 400,000, $500,000 of reconstruction coverage, but the claim happens and they're not taking into consideration that you did all of these upgrades to your house.
Mhm.
So God forbid that it's a huge claim where then you don't have enough dollars to take care of the house. And I never advocate to go like, you don't have to go all the way to the value of your house because if there's a fire, hopefully it's just in the kitchen. If there's a water leak, hopefully it's just in the bathroom.
Yeah.
So, we don't have to go all the way to say like, okay, we're going to rebuild it every single time that there's a claim. But this is where, you start looking at, especially for homeowners that have been in their houses for a long time that have a lot of equity, the house itself, we can move the lever of deductible. We say $5,000, but you can go way higher than that on deductibles now. Where if you needed to have a $20,000 deductible, hopefully you can get a HELOC on your house to take care of some of that deductible so that in the event of a bigger claim, you actually have the coverage you need, the total coverage that you need to rebuild in a major fire, or sometimes it's not even fire that we think, oh, my house is never going to burn down, but what about the smoke damage that
Mhm.
happened in the house? That's another number that gets calculated from that reconstruction coverage. So having the right amount of coverage, is not just about having lower coverage, it's also having enough coverage.
Yeah, I mean, look, when we sat down, because we did add an ADU, and we've made improvements over the years. I think by adjusting some of our deductible, but actually increasing our coverage, we did end up spending, I think it was about $800 or $900 more per year. But if we have an actual claim now, I know it's going to be covered, right? And in the overall scheme of things, it was well worth it to make sure that after we spent all that money on building an ADU, if there is a problem there, that we know it's going to be covered. And look, I think it's also why you want to work with the right agent. You want to work with the right company. We're big advocates of farmers. Again, whenever we've needed farmers, they've been there. We've never had to fight for it. I hear horror stories of other
Mhm.
people that are filing claims and the pulling teeth they've got to go through just to get a completely legitimate claim covered. But I think it's also the agent, right? You've been doing this for a long time. You're kind of like our inside guy on the big company, right? Like, and that's important. And maybe you don't always get that with a broker either. Talk about that a little bit.
It's funny that you use that term because that's always how I've seen myself. I'm the inside guy for you so that you know where you can bend and where you should never break, right? As far as what you do with insurance, a lot of the times, many people, they've been paying insurance for so long, and then the claim happens, and they're like, "Oh, it's time for me to get all my money back from the." That's another reason why rates get higher because of
Right.
that kind of mentality of I'm going to get all my money back. Now, insurance is a funny thing. You cannot touch it. You cannot put it, most people aren't putting their policy up on their wall like their degree and saying like, "Oh, look at my beautiful policy," right? It's just an idea in your mind until you actually need it. Now, when you need it, you mentioned about brokerages and people who are not exclusive agents. With farmers, we're exclusive agents, so we only represent In many cases, we're only representing farmers. And that allows us to have access to the adjusters who are employed by farmers. So they want to create a good experience for customers because that's who's paying their bills. That's who's paying, their salaries is the farmer's client. So they want to make sure they're just as tied in to having a good experience. When you're with a broker who's not tied to one carrier in that way, a lot of times they won't have that inside track. They don't know the policies inside and out because they can offer so many policies.
Mm.
So they start going for price shopping versus value shopping, and being able to offer the value of, I know how this policy works inside and out. In a lot of cases where we did get shut down from farmers, not specifically all of California, but specific parts of California that we couldn't offer our farmers policy, we started offering policies from companies like Bamboo and Aegis. And a lot of people will tell me now I can give them the farmer's policy, and they're like, but it's so much cheaper over here. And I said, yes, but I've never filed a claim with Bamboo. I don't know how it's going to react.
Hmm.
So when it's, how their claim system works, and that's a completely non-farmers thing. So I'm more hesitant to keep people on the cheaper policy because of things like that. Because really, when you need it, is it going to respond? Is it going to do what I know that a farmer's policy is going to do, which is cover you when you really actually need it?
Yeah, look, even cheap insurance is expensive, right? So you get what you pay for, and if you're gonna, in for a penny, in for a pound, if you're gonna do it, you want to make sure that you're protecting what for many people is their most valuable asset and their entire financial wealth, right? Their home. So, well, Jesse, look, this has been a great conversation, man. I really appreciate you coming on, sharing your knowledge, and look, if you're out there and you're curious about insurance cost. I'm going to have Jesse's contact information down below in the show notes. Jesse, thank you so much for being on today.
Thank you for inviting me, Dave. Always a pleasure.
All right, everyone. Hope this was informative. If you have any questions about real estate, please let me know. If you have any questions for on insurance, let Jesse know. And we hope to see you on the next episode. Take care.